Hello traders, welcome to our weekly analysis for November 6th to November 12th. So first of all, apologize for the last week. I had a very terrible week actually. Caught the flu and basically that's it for me for the whole week. And it just happened every winter, you know, so really a pain in the ass, to be honest, because I really hate getting sick. You know, I of course nobody likes to getting sick, but for me it's just really, you know, that's the end of the productivity. Basically I couldn't really do anything at all, couldn't even exercise at all, couldn't even trade, you know. Honestly, I just had a really bad week. So unfortunately that was what happened to me, so I took a rest and that's it. So but now it's getting a little bit better. Of course you can hear from my voice, it's much more energetic, and hopefully I can have better health, you know, through every years. So this week, second week of November. Now November is, you know, you have to look at the market in a yearly perspective. I know we always like to, you know, trade events. A lot of traders are short-term traders, but you have to understand the real big money, which is the real big money to move the market, is always from the hedge fund. And the hedge fund, they're really looking at market in a yearly perspective. So for them, this is really comes down to really the end of the year. Now, what they want to do, if they had pretty good year so far, first they don't want to give back their winning at the end of these 2 months. If they don't have a good year so far, they would try to make the last 2 months, you know, as good as possible. So what I'm trying to say is that don't, if you had a good year so far, you know, definitely you don't want to have any big lose. So you have to maybe strategically allocate your risk capital. You know, a lot of people, if you had a good year, then you want to maybe cut back on your risk capital per trade in the last 2 months of this year or any year. That definitely makes sense, because psychologically it's going to be very hard if you end up losing what you earned for the past 9 months and you end up losing everything in these last 2 months. So that's just something to keep in mind. And let's take a look at what happened last week first. Now, first of all, my trade call last week, that one is finished. And if you want to know the explanation, I'm going to post another short 5 minutes video just to you know, give people some educational purpose to why did I take the trade, how did it go, why did I manage it, and did it work out or not, and what's my lesson from it. So really, you know, the best way is to take a look at those videos, because that's the best way for you to actually learn how to trade, or the thought pattern behind trading fundamental catalyst. And I will have another trade of the week this week. Of course, I'm not going to force trade if I really don't see anything. So just look out for that if you are my email subscriber. If you're not on my email subscriber somehow, but you're watching this video, you know, just basically just go to my website and register. Everything's free, and you will get the trade call. You also get access to the 5 minutes recap for that trade call explanations. So last week, of course, first week of November, we did have the non-farm payroll, but last week the real main events, as I mentioned in my previous video, excuse me, previous video, was from the Super Thursday, which is Bank of England. So that event came out actually exactly as what I was saying. I did took advantage of that, but I actually ended up losing it. And now, of course, I will explain, because this was the trade call for the week. Made some you know, psychological mistake. So I will show you British pound. Let's get a cable. Okay, so you see last week exactly what happened is you have this rally ahead of the Bank of England events, which is what I always say, it's a buy rumor, sell fact effect. And if you look at others like pound CAD, same thing. You have this rally, and you see this arrow, right? I drew it 2 weeks ago, and just to see if it's going to react exactly the same way. And it did react the same way. It has this rally and a crash at the Bank of England events. And if you take a look at other pound pair, let's see, pound Newsy, same thing, you know, crash at the end. So actually, it worked out pretty well. You know, the market did goes exactly the way that I thought it would have. However, it doesn't mean you can win from that. The interesting thing is that if you look at the market from a lot of economics, a lot of commentators, analysts, you know, you always feel that everybody makes sense. Everything they say is very logic. But that doesn't mean you are able to become a trader, right? Because there's a very big part that's missing from analyzing the market and trading the market. And that is the psychology. And for me, this trade, you know, I don't mind to share this, is exactly the trade of the week. I will again do more explanation in the 5-minute recap, but this trade exactly, why I lost it was exactly the psychology, because it actually went exactly the direction that I said it would have. But regardless, I couldn't cap on that. So that was something worthwhile to learn. And that was really the biggest mover, because usually Friday of the first week of every month you have non-farm payroll, but this non-farm payroll, again, it didn't really move the market at all. Now you do have 261,000 job added, of course lower than expected, but higher than previous. And we all know previous was because the hurricane, so that's why you have a very low numbers. Average earning, however, was very disappointing at 0% only. But really, this is not the mover for the US dollar right now. The US dollar right now is really going to move on few events. First is the Federal Reserve chair, and now we know the nomination is Powell. He has to, of course, he has to pass the Congress. But most likely, if he passed, then he will be the next chair, which is really a neutral spot from him. He is not particularly dovish or hawkish, but of course still better than Yellen, because Yellen is a notable dove. Other than that, the tax bill right now is in the Congress, so that will be a real mover for US dollar. Then don't forget, December you have the last Fed meeting, which a lot of market really now anticipating a last hike of 2017. Then 2018, maybe we have 1 or 2 more hike, and then we'll see what happened to the US economy. Because if you look at the average earnings, things like this, the inflation is still low. It's still not at 2% at all. So this is something, you know, Fed has to either address and think of some other way to stimulate it. But really, I don't know what other way they can stimulate the market, because the labor market is doing well. GDP is doing well, but the inflation is just low. So a lot of people were guessing that Fed will probably just ignore it. They will just probably still on the hiking cycle and just completely ignore the inflation part. But we'll see what happened. So that was what happened last week, the main events. Other than that, of course, you have Bank of Japan, but this is really not a surprise. You have Canadian GDP, which is again minus 0.1. Not a good picture for CAD. You know, especially CAD right now is CAD right now is economic database currency. So Bank of Canada is not going to do anything right now unless the data is very positive or negative. So let's get into our analysis for the week. So let's close this one. All right, so first of all, this week. So this week is not that exciting compared to last week, and that's generally the case. You know, you have a very jam-packed catalyst week, and then you have very quiet week. So this week, right now it's Tuesday already. Over Sunday, Monday, yesterday, really nothing much happen. You do have the RBA rate statement, but a statement is, again, it's pretty much the same thing. RBA is, if you want to sum up, they are optimistic for the economy, but they are in no rush to hike the rate. So that's pretty much the same thing as we have seen before. On Tuesday today, ECB Draghi speaks, didn't give us any surprise. Same as Pola, same as Yellen. So really a very quiet day. And later you're gonna see the Chinese trade balance. Tomorrow you have the crude oil inventory and RBNZ statement. Now this tomorrow will be much more exciting. Now, first of all, let's talk about crude. Okay, what happened to the oil market? If you take a look at right now, it's a large surge. Now, if you have read news, you'll know this surge comes from the political tension in Saudi Arabia right now. So what happened is that the current prince has arrested a lot of other princes. And basically, he's trying to centralize his power, right? He's a new prince, newly appointed prince. So what does that have to do with oil market? Well, any tension in the Saudi Arabia, which is the largest exporter, the largest share for the OPEC, of course, is going to jeopardize the supply of oil. So anytime you have this kind of tension, people will start fearing that maybe the supply will be cut, then you will have a high demand happening. But I understand, because of the background, now this surge of oil was coming from this kind of political tension, then we don't think it's sustainable. Okay, because you want to see a price going higher on the real demand or the lack of real supply, not something that's coming from this kind of political tension, because this can be resolved very fast, and then once it's resolved, then oil will correct itself again. So just to give you a backstory that why oil actually went up this week. But aside from that, of course, we did have a possible extension from OPEC. So that if that happened, then that's a much better reliable reason for the oil to go higher. Now, of course, oil go higher, immediately the currency you have to think about is Canadian dollar. So that's something, of course, bullish for CAD. And if you take a look at CAD, such as CAD Yen, that's what this uptrend is about. Now, it doesn't mean I'm interested to buy CAD, because right now, what's really going to sustain CAD? Of course, again, because I'm a swing trader, if you are a short-term trader, you listen to the news and suddenly the news break out saying there's a tension in Saudi Arabia, you look at oil market, it goes higher, and then of course you can jump in to buy CAD Yen. But for me as a swing trader, I want a catalyst to be much more reliable, to be a much more strong catalyst. So for me, it's not really a quality catalyst for me to buy CAD Yen, because right now, the only reason for me to be interested to buy CAD is if their economic indicators come out to be very positive. If the CPI, GDP, and employment. However, that was not the case right now. So for me, CAD is a neutral currency at this moment. Sorry, let's go back here. And that's the crude oil. So tomorrow, again, this crude oil is going to bring the market attention to the oil market once again. Now, if you are a short-term trader, of course, you can take opportunity because right now oil is already supported. So if tomorrow you have a large draw, you can jump in to buy Canadian dollar. Now, for RBNZ, tomorrow it's going to be a big event. Why? It's not really about how the RBNZ is going to change its policy. It's the fact that New Zealand government right now is controlled under the Liberal Party, which is a new party that hasn't been in the dominant position for the past 9 years. Now they are going to make a lot of change. And one of the changes, they are going to change how the central bank have their monetary positions. So basically, previously there's a rumor saying that they want the central bank to not only looking at interest rate, but also looking at the employment data. Now, is that going to be positive or negative? It doesn't matter, because what the market is worried is the government seems to have too much say into the central bank, because the central bank should be a completely independent institute. So the fact that the solvency of central bank has been affected is not a good sign. Along with that, of course, the market is already feeling kind of dovish or bearish toward this liberal government, because they're perceived to be more anti-business, anti-foreign investment. So all these are not good news for central bank. Now, however, again, don't forget the market always will get more excited over itself. That means this rumor has already dropped New Zealand dollar. So right now, that means if tomorrow it happened, turns out that nothing has changed, they decide to leave the central bank alone, central bank still has a full solvency, then of course market is going to buy New Zealand dollar. So you always understand the fact, the economic fact of the market, and understand the anticipation, because what's really moving the market is the anticipation or the reaction of that fundamental factors. So I repeat, understand your trading currency is a speculator's market. So what's really going to move the price is traders' anticipation and reaction toward the fundamental fact. That means if you are trading the fact, you're not going to be able to make money. Because the fact is not how people buy or sell. It's the anticipation and the reaction. So that means you do need to know the fundamental factors, but you also need to know how the market is going to react to it and be able to profit on that. So I personally think that's the hardest part of trading, is that you have to understand the fundamental fact, but you also have to know the reaction and the anticipation in order to profit. So this will be an interesting event. Personally, I don't know the outcome. So again, if I don't know the outcome, I'm not going to buying or selling into it, because that for me, that would be just like gambling, 50-50. Unlike British pound, I already knew, I don't know the outcome of Bank of England, but I knew the market anticipated a rate hike, and because of that, they want to buy into that. So that's a much higher certainty for me last week. And same thing happened previous week in the ECB event. But tomorrow, I don't know how the RBNZ is going to, especially the press conference. And don't forget, you have the new RBNZ governor as well. So everything is really new tomorrow. You have the new government, you have the new governor, and we will see what happened, basically. So because I don't know, I'm pretty much not going to do anything about it. Also, I don't want it to be in New Zealand pair before this event. Thursday, not much going on, to be honest. You do have the monetary policy statement from RBA, but the actual rate statement, it hasn't been able to move the market, hasn't been able to provide any new surprise. I don't think the minute is going to do too much. And of course, Friday, honestly, nothing worthwhile to trade. So again, it's a very quiet week. Now, in this kind of quiet week, you can still trade, but you don't want to look at this week's catalyst. What you can do is looking at last week's catalyst and riding on the existing sentiment, or maybe you want to look at next week's catalyst and see if you can trade into any certain events. Now, for me right now, I just going to ride the current sentiment. But of course, if you want to trade that, understand the longer you are away from the sentiment from the previous catalyst, the better retracement you want to get in, because you don't know how strong the sentiment is going to last. So it's a much safer move. It's usually, if you, for example, let's take example of cable. Okay, so okay, take example of pound yen. Let's just say you want to sell British pound. Okay, of course you don't want to sell pound yen. Personally, I don't think Japanese yen is strong enough. But let's just say yen is stronger than British pound. If you want to sell pound yen, obviously you want to get in at a much better level. Why? Because this week you don't really have any catalyst to drive British pound or Japanese yen. So you're selling it because of last week's sentiment. And the thing is, you don't know how strong that sentiment is going to be. Even if it's strong, you don't know how much retracement we are going to have. So a much safer way is to always, place your entry at 50% retracement level or higher to getting a much better risk reward ratio. So that's, for me, a much better way to do it. Generally speaking, this is not a high probability trade just because we need something more to move the market. And when you have a quite week like this, don't really expect too much going on. So that's why I say the only thing for me that's kind of excited will be tomorrow's RBNZ, because tomorrow RBNZ is either going to change the sentiment for New Zealand, and don't forget, New Zealand dollar had been sold off for many weeks and months. If you zoom out, from September basically. So right now we see this kind of retracement. So tomorrow, what happens is that if the RBNZ comes out and continue to be very dovish, nothing has changed, or if they come out and saying that yes, now we have a new agenda for our future rate policy because the government wants us to do that, and now they are not that independent anymore, then you will see New Zealand drop. However, if tomorrow they came out and actually kind of neutral to hawkish, and they also don't have any new mandate, if they say no, we are still independent, we are not going to add employment to our future monetary target, things like that, then the market will have a relief rally. Then you will see New Zealand continue to go up, because don't forget, New Zealand is still attractive for the fact it's a highest yield major currency, and it's still a lot of institutional traders like to buy New Zealand, especially New Zealand yen, as a carry trade. So we'll see what happens tomorrow to the events, and that will give us a more clear direction. Personally, of course, I'm favoring bias in the New Zealand downside. So if tomorrow RBNZ can follow through as they had previously, then New Zealand will be a good pair to sell. But on the contrary, if they come out again kind of neutral to maybe a slightly hawkish, then it will be a good pair to buy. So that's pretty much it for this week. It's very short, and of course, don't forget, time has changed already for the daylight saving. But I'm sure you all know that. Let's see what else I have going on. So that's pretty much what I have. So quick recap for Aussie right now, neutral, fundamentally, sentimentally. Again, we have RBA, which is not dovish, but they are not on a hiking cycle in comparing to Federal Reserve, Bank of England, or Bank of Canada. So because of that, market will treat it as more dovish, more negative. However, the commodity market are still very, very supportive for Aussie. So they have this neutral stance, because they have some negative sentiment, but they also have some bullish positive sentiment. I don't have any catalyst for Aussie this week, so really not looking to trade it. And same position as CAD. Fundamentally, it's strong, but right now Bank of Canada is wait and see. And meanwhile, the fundamental indicators are not that positive currently. So right now, again, neutral currency. You have the fundamental strength, you have the strength from the oil market, but you also have the negative sentiment from the current fundamental data. Euro right now is a little bit weak because last ECB turned out to be quite disappointed. So right now, yes, fundamentally it's strong, but the market is really ignore that. They want to see whether ECB going to stop or taper the market more. So unless market can see that, otherwise euro will be a quite negative currency for now, especially versus dollar right now. Now that doesn't mean euro will be weaker than Japanese yen or Swiss franc, because again, it's still a fundamental strong currency. Now British pound right now is sentimentally weak, especially the BOE events just happened last week. So I do expect the negative sentiment to continue unless you have any new positive update from Brexit. Other than that, I don't think anything else is going to lift British pound, currently. And don't forget the Bank of England event last week. Again, it was really not that dovish. I know the market treated it as that they are not going to hike interest rate further. But I don't really sense any negative comment from Carney. In fact, he's very optimistic for the future economy for UK, and the forecast is also not downgraded. So it's really, again, what had happened and how the market perceive it. These two combination makes the price action. Newsy, again, right now it's neutral, a little bit weak, but tomorrow might change everything. So we have to wait and see. Dollar is the only strong currency right now, but you have to understand there's a lot of things that can shift US dollar. First is the tax bill. Now, if this bill doesn't pass, that's going to be a real devastating blow for Donald Trump. We're at the end of 2017 with the Republican Party pretty much control the whole Congress. If they couldn't get this passed, that's really a bad sign for 2018, 2019 to come. So we'll see what happens. And other than that, don't forget the Russian Gate, which is a Russian election probe investigation. It really comes to the end. A lot of people have been it's going to be on trial. So we'll see exactly what happened to that. It's going to be another political turmoil. So that's pretty much it. A very short video. Again, not much happening this week, but again, we don't know. Not much fundamental catalyst, but we don't know what's going to happen through the sentiment, through the news. So it might, who knows, it might still be an exciting week. Other than that, I hope you enjoy this video, and if you do have on my email list, then I will send out that trade code video for last week, because that trade is finished. And then this week I will send out the trade code to your email if we have any. So watch out for that. Again, thanks for watching. If you have any question, feel free to let me know. Thank you. Bye-bye.